My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to America. Other people want to make friends. I'm just trying to make you some money. My job's not just to entertain, but to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. China on! Yep, a senior medical advisor from the Chinese government tells us the coronavirus outbreak is peaking. It may be over by April, and that translates into a nice opening for the stock market. This scientist, Zhong Nanshan, has street cred. He's an 83-year-old epidemiologist who helped fight SARS 17 years ago. Next thing you know, the market's making a stand, although that move didn't last, with the Dow ultimately sinking less than a half a point, S&P gaining 0.17%, and the Nasdaq inching 0.11% up. But at one point, the market was flying all of this. Suddenly, you see what's happened is there's a bull case developing, a China bull case. We're getting our first data that shows a much higher percentage of people are recovering from the disease while fewer are dying, which suggests that maybe we're through the most lethal stage. More importantly, at least as far as the stock market's concerned, a legendary hedge fund manager, Ray Dalio, comes out and says concern about the outbreak is exaggerated. According to Dalio, hardly anybody's going to be talking about this virus in a year or two. Well, that's exactly what we needed. A good old-fashioned hedge fund manager telling us the fears are overdone. And come on in, the water's fine, okay? I know he didn't say that, but that's how the market interpreted his comments or misinterpreted them. So what happens? I think we've got a sneak peek into what this market will look like once this outbreak's truly beat. And to me, it looks like a coiled spring. Let's go to the tape. First, there's the cruise ships. Despite some unappealing steps recommended by the CDC yesterday that make these quarantine ships sound like floating hospitals, anything that gives these companies relief is met with massive short covering and massive buying. Hope springs eternal. Royal Caribbean, Norwegian Cruise both jumped roughly 3%. Even the beleaguered Carnival with its floating sick bay off the coast of Japan rallied a buck and change. Why not? One day the Chinese will beat this, and as Dalio says, we won't be talking about it or thinking about it a year or two. Next, the hotels move up for the same reason. Marriott picked up a ton of China when it bought Starwood 4 years ago. The stock jumps a buck and a half today, almost at its high. Wynn Resorts is roaring too. Why not? If the disease is really peaking, then gamblers will come right back to Macau. How about the semis? Yes, the semiconductors with Chinese exposure. Well, yesterday the cloud stocks soared, while the more cyclical semis got hammered, along with one of their biggest customers, Apple. Today, though, we saw some excellent action in NVIDIA, NXP Semi, AMD, Skyworks, Cirrus Logic, Qorvo, Broadcom, although Apple wasn't able to lift. Of course, these chip makers benefit from more than just China. When a federal judge blessed the merger of T-Mobile and Sprint, big surprise there, it unleashed a flood of euphoria as Wall Street's now betting the combined company will be a powerhouse of spending for 5G. All of these semis have a stake in 5G, but there wouldn't be any rally without China. The semiconductor equipment stocks erupted too, another sure sign of corona confidence. The airlines, pathetic hangers-on in the China trade, all rallied. United's the cheapest with the most China exposure. The Chinese-oriented industrials had a super day. Caterpillar, Emerson, 3M, Honeywell, Cummins taking off. They can always be counted on for dreams of sweet Chinese orders. Same with PPG and Illinois Toolworks, both the betters of high-end autos made in China. Now, yesterday, while I explained why oil and gas stocks are uninvestable for the long term, I predicted that we could get a bounce in the stocks that have been beaten down the moment there's anything positive about China, and that's what we're getting, especially if it looks like that Trump is going to be reelected. Regardless of how you might feel personally, the stock market loves the guy. With crude briefly making a China-related stand at $50 a barrel, I'm betting the oil cheerleaders will be out in full force tomorrow, touting the producers with the big yields and tremendous growth prospects. I don't want you to believe the hype. I want you to lighten up into any strength. The group's not investable. You know where the big money was made today? Shorting the China off stocks. That meant going against the pop of the opening in Microsoft. Do you know that was a 6-point gain if you did that? It meant slamming the cloud kings like Adobe or VMware or Workday because they just don't have that much China business. It meant banging down the high-flying Clorox because who needs to stockpile bleach if the epidemic's peaking? The thing about this strategy is they can work for a day, but longer than that, I think it's a fool's game. Why? Well, I'll tell you why. Here's what you have to do when you have something like this. You have to find your true north. You have to find someone you trust, someone you believe in, someone you follow, and someone, if you have to, hang on every word. And I've got my guy. His name is Dr. Tony Fauci. That's F-A-U-C-I, but it's pronounced Fauci. He's an immunologist and director of the National Institute of Allergy and Infectious Diseases, the National Institutes of Health. He's been on our air. I've never spoken to him personally, but I read everything he says. Now, if this guy were a hedge fund manager, he'd be Ray Dalio. He's been right every single step of the way on this virus as well as every other one I've followed him with. Yesterday, he gave an interview to the Washington Post, and my takeaway was you should be buying the China off stocks, because his message was anything but reassuring. Listen to this. Fauci says when it comes to the coronavirus, quote, the general public is naive with regard to protection, and it has serious potential because it's already spreading rapidly, end quote. So then, he's asked, can it be contained? Quote, the short answer, he says, is we're not past the point of containment, but it really does have the potential to turn into a global pandemic. He then continues, once you get multiple countries that have sustained transmission from person to person, then it's almost inevitable that it's going to start spreading here, end quote, ouch. Travel bans? No, they're just merely buying time. They probably won't work. Fauci wants to help. The CDC wants to help. The NIH wants to help. The Chinese, they don't want those organizations' help. Not reassuring. That's why I want to take the other side of today's trade. Why I find today's trade just instructive and nothing more. See, they show you where the coil springs are when Fauci changes his mind. I don't know when he's going to. He's real good, though. Remember, the global economy is slowing because of this virus. I suspect that most of the stocks that were up today have estimates on the street that are going to prove to be too high because of the outbreak and will need to be cut. Yes, we heard chatter on the Hill that Fed Chief Powell is our back if things get out of control. But what we see in China is a country that seems a little too out of control to believe they contain the disease. And therefore, while I don't want to conflate life with money, I have to tell you, I think when estimates come down, stocks go down. Look, I want very much to throw in all of my body and all of my brain with the 83-year-old Chinese doctor or with the brilliant Ray Dalio. My instinct is to say that come April, it will die out like most flu outbreaks, although if we don't solve it, it'll come right back in the winter. But so far, you have to be encouraged by the travel ban's effectiveness in this country, 13 cases. But this one's way beyond the ken of most investors or commentators. We're not epidemiologists. Hedge fund managers aren't. Plus, the disease can be episodic. I look at a Johns Hopkins chart that shows the numbers that recovered. Right now, they're a growing amount of recovered versus the dead. It seems like an improving ratio. However, have you noticed, after a big flurry of hope, lots of news articles, headlines, there's no luck with any vaccine. There's no luck with any medicines used before for other kinds of flu. There's nothing that any biotech company's been able to come up with, perhaps because the Chinese haven't exactly been super forthcoming. I have tremendous faith in our scientists, but I have more faith in Tony Fauci telling it like it is. And I don't like how it is. The bottom line, until Fauci grows more positive, changes his view, until he says something optimistic, until he disavows the notion of a public health nightmare in other countries around the globe, I'm saying I am staying squarely in the China off camp. You know what? I recommend that you join me. Let's go to Ryan in Oregon. Ryan.
Booyah, Dr. Cramer.
Booyah.
Thanks for taking my call, and thank you for all that you do for the young investors out there.
Oh, thank you, man. Thank you very much.
I'm calling about one of your favorite 5G stocks, Marvell. It's had a good year. However, it's down about 10% over the last 3 months, and it just had a double downgrade late last week. Is it still your favorite 5G pick? And if so, is this a good time to buy?
Okay, we put out a note today for members of the ActionAlertsPlus.com club saying that it is still very much a 5G play. Now, the double downgrade was disconcerting, and we mentioned that. And we did say, listen, there is some concern because 5G is slowing in all these countries because of the virus. So, like many companies, are its numbers, are its estimates too high? It could be. Do we believe in the stock? I think it's going to be a little bit delayed. That said, the stock was up big today, and in our note, we made it very clear that the story is not, well, let's just say the story is disconcerting. And I got to say that. I want every story to be great, but they have to be great in order to say they're great. There's a lot of slowdown in 5G around the globe. Let's go to Philip in North Carolina, please. Philip.
Hey, Jim.
Yo.
Hey, North Carolina, first in freedom and first in flight.
Didn't know that. That's right. Yeah, I remember that. Go ahead.
Hey, I'm trying to make a play in the cannabis market. I've noticed that to the 4 states I've visited, the demand is growing and growing strong. So I'm looking at Kronos Group, CRON. What do you think?
Well, if you're going to look at one, I always return to Canopy. Canopy's got this guy, David Klein, very serious business person, former CFO of Constellation Brands. Kronos, not as good. But remember, my feeling on the industry is that it got too hot and a lot of people got burned. I'm staying in the China off camp for now. Consider doing the same. On Mad Money tonight, why Simon Properties Taubman Center's buy is so important and which group in this market could be ripe for similar consolidation. Then the market's been on a tear in spite of the coronavirus outbreak, but could we be due for a breather? I'm going to go off the charts to find out. And Columbia Sportswear is tested tough, but could unusually warm weather be bad news for the company? I'm talking to the CEO to see if its post-earnings decline is a buying opportunity. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.